Okay, guys, for all of you new traders out there, we're going to talk about how to begin investing, how to follow along with the flow, and we're specifically going to talk about how to understand the difference between swing trades and day trades. Okay, a lot of you people, a lot of us, when we come into the markets, we don't know what our goal and our role is just yet, and that's really because we don't understand how to decipher what the best thing to do between these different states are most of the time when we are still learning. You need proper guidance. As long as you have somebody to show you the proper ways to decipher, analyze, break down, and digest, then you'll be perfectly fine. Let's just go right into it. This will just be a quick update, and we'll get deeper and deeper, lesson per lesson. Y'all know how it goes. So get subscribed and don't miss out on this. So we'll just use any random stock. Okay, we'll use PRZO for example. It's up here at the top of our list. PRZO. Some decent stats. 300 was 3 million in value in average volume, 200 million in current volume. Picking up in this volume like 205 million would make it a high volume, high active stock. They do have good news coming out, adding on to the bullish sentiment. We'll speak about that in just 1 second. As the swing trader like me, you want to be into the safe, easy, early seat. Down at the very bottom, when that stock is oversold, again, you have no business touching a stock if that thing is overbought and dangerous. You want to get in when that thing is oversold and safe. If that stock is overbought and dangerous, they are going to sell that stock off. Period. Once it gets back down, oversold and safe, they're going to prepare to buy that back up. Period. If they make bullish divergence, truly made clear, true bullish divergence. That's your yellow MACD line crossing over the blue center line. This thing will uptrend, and you get that pop. Maybe you sold out early, like watch this on your 4-hour chart. Maybe you sold out early off of that first quick move from 55 cents to 83 cents. But it will have a reversal back up to 74 cents. Us first rounds of swing traders will want to lock in gains when it hits that first round of a rebut. They want to lock in gains, push it back down, and reload the next round when it gets back down towards its most lows and oversold. And faster day traders will hone in on that with a 15-minute chart, going from its most low and oversold back up to rebut. As you can notice, the closer you hone in on your time frames, the more choppy it gets because people are moving fast. Let's use another example, a random one, RGTI. You can notice here on RGTI, and we'll start this one off on our 15-minute chart. Again, you do not want to get in when that thing is overbought and dangerous. You have no business getting into a stock when it's overbought and dangerous. You want to get in when it's oversold and safe on your specific chart trading time frame. In this case here, we're looking at 15-minute chart. We would like to be going for a swing trade or a longer day trade. A longer day trade will be hard in this stock, seeing how it's all choppy, low volume, bad statistics, and stuff like that. Which is why, again, it's so much safer to go for the swing trade. Off the swing trade, you can see more clear bullish divergence. Notice this, take note. Very fast moves on the 15, very choppy on the 15 or a 1 minute chart sometimes because they're a lot quicker. That sentiment has to hold, and they are also facing market conditions. If you are going for the swing trade off of your 4-hour charts, you see wider spans, more clean spans. Again, no business overbought. You waited until it went oversold. You got in from $1 up to $2. No business overbought. You waited, you locked in gains there. And wait till it got back oversold. Made bullish divergence. It went from $1.20 back up to $3.37. No business still being in there while it's overbought. So they would sell it back off. So it gets down towards the most low and oversold position where it makes bullish divergence going up to that $3. Easy bull runs, easy flows to follow along with. But you have to understand something. Yo go and yo roll. Because everybody not going for RGCI for the quick day trade. As you can see, it's choppy up in there. It's even more bearish in there for day trades. People are catching wide spans for swing trades and it's still holding up. I mean, a lot of people are more confident to be going in for a longer term type move. The longer term investments. So you're looking at your longer term investment time frames. Well, you'll be able to see if a stock is again overbought. And look, I can show you two bounces here, right? If I can show you a few, but I'll just show you these last two. Again, no business getting in there when it's overbought. It's at 343. It was overbought. It was going to make bearish divergence sell off. It got oversold to at least to its most low and oversold. And I notice here on the weekly chart, it's not all the way down to oversold. Well, you hone in from there. By honing in from there, you can see it actually did go back down to its most low and oversold position. From oversold to overbought. Take a sell off, oversold, overbought. Take a sell off, oversold, buy in, become overbought, sell off. Go back oversold. You finna buy back in overbought. See more clear spans on different chart trading time frames. From oversold to overbought. Getting ready to make that next round of the bullish divergence. Want to see another example? Let's show you something on something big. Okay, let's look at like OP Amara. Amara's a big one. So, Amara, like if you look at a 4 hour chart for Amara, it's not really coming in for the cleanest of swings throughout the days and whatnot because they're going in for a couple days off Amara because Amara is up here at a bigger price. So notice how a bigger price thing like PRZO or something or whatever up at a dollar will be a lot more volatile than something like Mara. For Mara, they be using a weekly and whatnot. Use your weekly chart. And same thing, same thing. You had no business getting that thing when it was overbought. It was overbought, $20. It's sold back off towards its most low and oversold position. You really want to see it get down to that 30 if you can, where it's like all oversold, but the most low and oversold, nothing's wrong with it because you can still just like hone in to your dailies in 4 hours and you still be able to see bullish divergence from about 7 to about $30. Where it becomes overbought. Where you want like in gains, you had no business buying in there, it was overbought. Until it goes back down towards its most low and oversold position. Notice in between it might be choppy. So you wait until you see, again, clear bullish divergence. Notice here where it's all choppy, you don't see clear bullish divergence, so you don't want to mess with it. You want to wait until you see clear bullish divergence. And it's going to go back up, overbought. You ain't got no business buying in there right now, which is why you see them selling off from $30 back down to $27. And why you see that quick wick being created, because they already knew they had no business buying in there at that time. I can show you some other things. Remember, these sites don't start out the top, start out the bottom. Not overbought. If it's overbought, you have no business. Wait until that thing gets oversold. There are a full list of these 52-week lows and oversolds. Choose what make you feel most comfortable. Just know every single one of these completely wrecked. Every single stock, mind you, has gone down to this big sell-off. It's about a list of about 30 of them. But Billy, why are you looking at these? These are they are wrecked. Nobody ever bought those. They're the worst of the worst. Well, these stocks, they don't start out at overbought. They start out at those 52-week lows and oversold. Then they start to get ready to make that next round of the bullish divergence. What I'm showing you here is a list of about 40 stocks that are next in line. In fact, look at these. They're all pretty much green down there at the bottom. Are the next in line to come in to do this. How you see Kappa doing right now from its 52-week lows and oversolds. Again, you don't want to get in there at the top. You had no business getting there when that thing was overbought and at the top. But when it got down oversold, that was the time. It made clear bullish divergence. They knew it was. They like their different stats. They like the way their market caps look, and they like the way their free floats look. I'm not going to tell you too much about key stats right here because this is already a lot of information for new traders, period, to digest. And I know you're going to need, it's going to take you even a good couple minutes, maybe even a whole day to truly understand and watch this video and a couple other ones back through to really understand how it's going. So I'm not going to run you with much more talking about options and stats and volumes and the floats and stuff like that. The main important thing to understand here and the key takeaway, not only just in this video, but for life on the markets, is you have no business getting if that thing is overbought. You want to wait. And it don't matter how long you wait. You waited 1 day, you waited 2 days. You got to wait 3 weeks. Whatever it take. You wait until it gets oversold and safe on every single stock ever for the rest of your entire life. This is not rocket science, okay? You can do this. I'm literally in here watching dozens and dozens and dozens of people join in every single. Look at this. We got like, what's this? Probably like almost 10 almost 12, 30 new people that just joined in today. I'm watching dozens of people join in every single day nonstop. And I've been doing this for years in here. Look, you can scroll up and bank with Billy, and you will never, I promise you, you will not even make it to the top of the invite list. I promise you, you will not even go to my section. You'll be able to see if you want to understand and study on how I'm moving and understand what's going on, just go to my section. For the last 4 or 5 years, I've alerted out every single stock I've ever messed with. Telling you when to buy at the very beginning and telling you when to sell. With posting up my proof and verification of those gains and holdings so you understand you are not alone. You will always be able to see the alert saying we are selling out of those things at those times. And I promise you, I challenge you to make it to the top of my section. You're gonna be scrolling for weeks. I've been in here doing this in this one section for years. If you really want to study and you want to be a full-time trader, all you gotta do is just come and do it. Just period. Remember, they do not start at the top. So when you're looking at these 3-month games, looking at DRUG, you over here looking at XQ or QUBT, and you see these things are overbought now. Again, remember one key thing, the most important thing that you're always gonna do every single day for the rest of your entire natural life on the markets. You have no business touching that stock as that thing is overbought and dangerous. This will be our first lesson if you're new here. That's where you really want to begin with understanding. And we're gonna dive deeper and deeper in the next ones. We're gonna talk about the key statistics and the options and how to read the different alerts and how to follow along with different traders and how to avoid the FUD and control your emotions and all that stuff. We're gonna talk about, in fact, that's gonna be the next video, controlling the emotions. You know, in fact, that's my favorite video I'll make. I'm Billy Banks. I'll see y'all in there and happy trade.